Trump tweeted something else yesterday to President Xi. Did you guys hear about that? Hold on. Find this tweet because I gotta do it. Hmm. Oh yeah, here we go. This is what he said last night. I'm not reading the whole thing, but he said, "Please give my warmest regards to Vladimir Putin, Kim Jong Un, as you conspire against the United States of America." Oh my gosh, what a goofball!
Hey Blake,
Hey, good morning, Jeff. How are you?
good. How you doing?
I tell you what, it's been a good week because we got long gold,
Of course. And
and
if you're not long gold, you're on drugs.
I tell you what, it feels like a drug to be long on gold right now because I've got like one contract left, and I'm like, I don't even know. I think I should just set the stops to break even and just forget about it because I don't know when it's going to top out.
Well, I mean, the interesting thing about it, usually when gold does this, it'll last a few days and then all of a sudden they'll dump it off and correct it back a little bit. But right now, there's really nothing really stopping it. I mean, you've even got copper getting back above 460 and silver right now, uh, trying to get to 42. It's looking at 42 and taking nice pictures of it and everything like that, but just can't seem to get above that number yet. But it's trying to.
And you said that was copper?
Copper's above 460. Yeah, I mean,
Oh
copper
my
got
gosh.
that, that dump off of about 25% several weeks ago because of the tariff
Yeah,
thing. And it held above 440. But I've been waiting for it to get back above 460, and it should be strengthening back up now. So, I mean, it's a long
it's
ways from its
trying.
all-time high. I mean, we went up to 538 before they dumped it off. So
Which
we'll
is
we'll
just
see if it
crazy.
gets a moving once again.
That's a giant sell-off, and that was just because of the tariffs?
Yeah, that's exactly what
What?
it was. Yeah. Well, I
Holy
mean, the
cow.
thing is, I mean, it's kind of it was a big surprise. And the reason for that, I mean, Trump has done it twice to copper. When they first came out and said, we're going to start putting tariffs on stuff. Okay. And this is before April. This is, back in, March and all this stuff. But they put a delay on copper and copper byproducts out until September, is what they did. And
Mm-hmm.
so, hey, copper, I mean, that was cool because we could import a lot of copper without tariffs and everything like this. And everybody in the world was like, oh, cool, we can start. And they started importing a ton of copper into the United States. And then Trump turns around and goes, nope, we're going to do it in July. And I mean, that copper dumps off. And then he goes, well, no, no, we're not going to do it quite in July because we're going to delay this out and everything like this. And they were just like, okay, fine. So it starts rallying again, and then they start making highs, and all of a sudden he goes, no, we're just going to put it on tomorrow. Boom. And there it goes again. So it's a tariff slap is what you're getting out of it. And now it's
Interesting.
trying to reprieve itself and start trying to move back up again. And I mean, with gold making highs and silver's above $40, it's probably going to drag copper up a little bit.
Oh yeah.
But we'll kind of see. And even gold got punched in the face just because they were going to have tariffs going out on specific metals, and they thought gold was part of it. And then they
Mm-hmm.
found out, hey, it's not. They took it off, and so gold took off.
That's
So, but yeah,
that's what I was thinking because Trump announced that they weren't going to do tariffs on gold, and that's when
right.
it sold off. And I was like, oh. I was like, that's a buy the rumor, sell the news play.
Yeah,
Here's the real move. It's going up. And then I
right.
read something yesterday about India selling a bunch of like treasury notes and instead buying gold, which I just thought was crazy.
Well, no, I mean they've been dumping bonds and stuff like that for a long time.
Have they?
And so I mean they've in all the central banks, especially India and China, they're always buying up tons and tons of gold, literally tons of gold. Um, so
Tons of it.
that's the big thing. I mean, they've been doing that, but all the central banks buy up gold. The thing that worried a bunch of people is if you, I mean, you go back before what was it, 1971 or two or whatever it was. I mean, you couldn't own gold. I mean, that was no bozo no in the United States, and finally they said, hey, you can own gold again. And so, but they still put restrictions back then on certain countries of gold, like the
Yeah,
South African Cougarand. You couldn't own any of those kind of thing, just because of apartheid and all that good stuff. So, I mean that's they've always played with gold a little bit here and there, but for the most part, I mean, gold is in theory what backs everybody's currencies and this, that, and the other, which that's not true anymore, but it used to be. I
used
mean,
to
they
be.
still had gold and silver certificates as US dollars back in the 30s, 40s, and stuff like that. And
Mm-hmm.
if you can find one of those, dollar bills, if you will, it's pretty cool. So,
Worth a lot.
I mean, they're not worth a tremendous amount, but they are backed by silver and gold.
Yeah,
So, in theory,
in
so I
theory,
mean, it is a
well,
silver certificate and a gold certificate. So, yeah.
I I just think this stat. I just went and looked back on Thinkorswim. Like as long as you can go on gold, it goes back to 1976. It was at 120 bucks.
Oh yeah. Yeah. I mean, inflation is real big. I mean, there's a lot of things that were a whole lot cheaper back then. I
Yeah.
mean, I remember when I was a kid, I mean, I'd get a dime and I could fill a bag full of candy. I mean, with a dime. I
With
mean,
the
I'd have
dime.
candy for a week after,
Yes.
just by spending a dime. So,
Oh, those were the days.
yeah,
S-
there is something for inflation for sure. I mean,
Oh
you,
my,
you go
yeah.
to you go to McDonald's. I mean, when I was in high school, I could go to McDonald's. I could get a Big Mac, two regular hamburgers, and a large fry. And there's your teenager, right? So, but I could get those, and it was about $3.15 for all that. And so you do that now, it's going to cost you 12, $15.
Oh yeah. At
So,
the minimum.
yeah.
Gosh.
So, but it was like $3.15 for all that. Yeah.
Yeah. That's freaking McDonald's is like criminal now. You go in
Yeah.
there and it's like, why did we come here to begin with? Yeah, now it's $9 for the Big Mac sandwich only. You want
Yeah.
fries and a drink, $17.
Yeah. But I tell you, I mean, like I said, things are getting real expensive. In fact, one thing, and as much as you hear about, California and stuff like that in the news, it's a huge part, of the United States. And I mean, we do a lot of shipping out of there. I mean, they have quite a few refineries there, but they're starting to shut down the refineries again. I mean, Phillips just came out yesterday and they're shutting down their LA refinery by December. I mean, you're talking over 900 people at that refinery that's not going to have a job anymore. And then next year, I think March of next year, Valero is shutting down its refinery. So you're
Really?
removing somewhere around 250 barrels a day of refining products out of California. Well, now all of a sudden you're going to have to, get gasoline and everything like that imported, quote unquote, across state lines into California. I wouldn't be surprised by the middle of next year, you're not seeing $8, $9 gas in California, which sucks for them.
Really?
Oh yeah, right now it's
Ugh.
already 5 or 6, but I bet you it doesn't. I bet you it goes to $8 by the time they get those things shut down by the middle of next year.
Holy
I
cow.
mean,
Well,
I feel
welcome in,
for them, and
Chris.
that
The
really is horrible for
it's
them.
going to be the Great Migration
Yeah,
again. People
yeah,
just leaving California.
yeah. I mean,
Yeah.
I feel for them. It's like just bad, but that's what happens. So it's just like the
Full circle.
refinery up in what was that, Indiana? Was it? I think it was Indiana. They have a small one up there that they had a fire at it, and then all the gasoline down here along the Gulf Coast shot up because we get a lot of gasoline from up in there. So it's just what happens. And you start shutting those things down, it's going to get more expensive. I mean, we're going to have to, before long, just because we can't build refineries, before long, we'll be having to export all of our oil just to get it refined and have to import it back. That's not going to work out too well. So they're going to have to fix that problem. So anyway, I'll get off my high horse.
It's not a high horse, man. It's just good education.
Yeah.
Things to be aware of. That's
Yeah,
all.
but I mean it is. I mean it's going to hurt your back pocket
Yeah,
big time.
for sure.
And I feel for the people out there just because I mean they're getting screwed and the government's going to have to figure out a way to either build more refineries or do something along those lines. I mean, you can't, run your car on nuclear yet. So I
Yeah.
mean, you're going to have to do something. So
Can we do how far is legitimate sustainable hydrogen? That was like the big push is we have EVs and it's like we're going to do hydrogen cars, we're going to do this
yeah,
and all these alternatives, but
yeah,
yeah, something's got to
yeah,
be different.
it is. Something's going to have to change.
Yep.
So, but anyway, and but it, but yeah, but I mean, if you
Yeah.
just kind of look across of everything, I mean, right now, I mean, and you saw, crude oil kind of jumped up, and that was one of the reasons it's down today just because of OPEC. OPEC came out and they're going to start increasing supply again, quote unquote. So they say, who knows? But yeah, I mean that's just kind of that kind of thing all around the world. And even I thought this was kind of I don't know how much of this is true, but just kind of reading through the grapevine a little bit, it sounds like Iran is actually selling their crude oil as Iraqi crude so they can sell it to get around the sanctions. And I was just like,
What?
yeah, I thought they hated each other, but it sounds like that's what's going on. So they're stamping it as Iraqi crude instead of Iranian crude so they can sell it. And I was just like, all right, that's kind of interesting. I wonder where that stuff's going.
Yeah. Very interesting.
The things you hear in the market.
Yeah. How about some gold there,
Oh, isn't that
Jeff?
awesome?
Yeah, right.
I mean, you got to be in old gold. And I really think, I mean, have you seen yields on bonds? They're jumping up again.
Yeah.
And
It's expected. I mean, Japanese government bonds, the 30 years up to like 3.3%.
yeah,
The Fed's going to be cutting. I think the 10-year yield's not really good. I don't know. I don't know if we go up to, 4.8 to 5% 10-year. We might just chop around. I just don't think the long end of the curve is going to change that much compared to what we're cutting on the short end. But
right.
this run in gold, I mean, we've had a pretty good, like yesterday, I hit all-time highs in the portfolio again for the year, which I'm stoked with considering the market's down, off the highs. But like gold, silver, and Bitcoin are all like pretty good runners yesterday. I mean, gold's chart. Can we grab the screen here, Blake? One of us?
Yeah.
Okay. Let me can you let
There you
me let me
boot. I
share?
think you can boot me off. There you
I'm sending a request.
go.
Okay. So we've had a really steady like 5-6 day run in gold. Jeff, I want to get your thoughts on this. So here is this horizontal line at the top says gold capitulation 30% from the dip. This is
Okay.
similar to a run that we saw. So I'm looking at if price gets 30% above my 200 EMA. The last time we saw a run like that was back from 2009 to 2011. We had over 600 bars in gold before we came
Yeah.
back to the 200 moving average. I am wondering if this, because I don't think this is a fake out. I think this trade is legitimate. I mean, I've got doodles from my previous class. Here we go. So I looked at this as a ascending wedge. So if you take the previous
Hmm.
highs and the higher lows, this market just broke out. And this is an ascending wedge, which shows the bulls are clearly in control. What got us there with the bullish run has just consolidated and we're breaking higher. Now, a measured move should be something along these lines. And this could make, this could make for a pretty exciting gold trade. We take this recent low. Okay, take this recent low right here. I'll just box this in. And then we get a breakout. I like to measure symmetry a lot of times.
Ah, yeah.
So right in there, either from this level or this level could be a potential breakout. However, like that's exciting to be like, hey man, gold can get to $4,000 an ounce, which I think as a round number could certainly be a run. It's only, what, less than 7% away.
Yeah.
We'd be going from current price, there we go, up about 6.9%. Okay, so we can have this run on gold. Cool. But what I thought was interesting is we're at almost 500 bars now, Jeff, since we hit the 200 moving average. This was all the way back in, this would be October of 2023 to current. The last time we hit the 200, I need to compress my chart. There's so many bars. So right here, we have gone 400 and almost 90 bars, 488 bars. That is a long bar count on a daily chart. I usually see like 250 to 300 bars is like, okay, I think like reversion, could happen. But since we were breaking this out, you and I talked about this. I don't know if this was like a roundtable that we did. It might have been a roundtable, but I'm like, I could see like a bubble type move or like a parabolic type move on gold before we have like a bigger, nastier correction and we pull all the way back to that 200 moving average. So if you're enjoying this run on gold, I think once we get above like 3,800, maybe even 4,000, I'm going to start putting in trailing stop losses. I think this thing could run and run surprisingly high, but do not be left as a bag holder when this thing decides to turn and drop. I mean, let's just say that we get to 4,000 and right after 4,000, we drop to the 200 moving average. I do not want to be left as a bag holder watching gold drop 20%. I don't think anybody does.
No, and I think one thing you're going to have to be really careful of, and I'll just chunk this one out there, as much as gold is up, and I love that to death. When the Fed comes out, they may use that as an excuse to start a correction in it. So beware of them. If they shoot it up off the Fed, fine, hang on. You can ski behind that boat all you want to.
Right.
But if they might use that as a correction, I mean, a time to correct that market, because it's had a huge run. I mean, think about gold, it's up 40% on the year. I mean, that's huge.
Absolutely it is. Yep.
And so when I see something that's up 40% on the year, it's just like, okay, this is like another Nvidia. And it's just gonna,
gold gets traded like Nvidia. That'd be insane.
Yeah, exactly.
Yeah.
So, but I think a lot of people are getting worried. And what's interesting, this is what I thought was really interesting yesterday when we had that big push up in gold. The dollar was up and yields were down. I mean, yields were up. And I would just like, wait a second, hold on. What? I said, all of a sudden the dollar's up, yields are up, and gold's up. I was just like, now we've got a real bull market here because usually it's the opposite of that. So I think we're probably going to see at least 3,700 out of this before we take a breath.
I mean, and we're right there.
Yeah.
I could say, I mean, I've got this one. The reason I measure this is because let's just go back and I'll show you that exact example. When we had a daily chart from 2009 to 2011, this would have been, I mean, that was a decent bar count run, but we had COVID that poked it, and then it would provide a really good support. But we go all the way back here. This is the run that we're talking about.
Yeah.
So this was that 09 to 2011. This is that bubbly type run that I saw where it's like this thing went like parabolic before it came crashing back down.
Right.
And that's why I measured 30%, because when this started to run until it topped out, we did see some nice divergence on the daily time frame, but we topped out here. And that was about a 22% rally above the 200 moving average. So it just kept going. It kept going. The bar count, I go all the way back here, and you're looking at a bar count that ran here. I mean, look at this thing, man. This is over 500 bars right in here. And we ran all the way up to, we topped out around 600 plus bars, 620, and then we just came smashing back lower. So, it could be a timing thing. It could be a distance thing away from the 200 moving average. But I'd say enjoy the run while we have it. I think, like Jeff said, 3,700 is doable. I think if we get like a really big surprise run and this is just one-sided, we might stretch into like the high 3,000s, maybe 4,000. But
yeah, I mean,
just
I wouldn't
don't
be surprised
give it back.
Yeah, I
Don't
wouldn't
give
be
it back.
surprised in the next couple of years we're not at 5,000 gold. It's just, I mean, the wave getting there. And I've been kind of waiting for it to, you'll notice over the past 6 months over here that we go up, we make a high, we pull back. We go up, make a high, we pull back. We go and just like, stop doing that. Just bust out or sell off, do something.
Yeah.
And finally, right now, it's on the bust outside. So
exactly. Yep. And I wish I had, I'm playing gold in a couple of ways. I have CEF, PHYS, GLD, and then in silver, I've got those silver and gold trusts as well as SLV. I have traded a lot of gold futures in here. Looking at the daily chart, here's gold futures. I mean, any dip that we saw, I would put in an option strategy that gave me some buffer. And I've done that a couple of times, but I'm still like preferring to just buy dips at like the 144, 200. I just haven't gotten it. So really it's been, I'm holding GLD and I've been holding that for the last couple of years, but it's just creating like option strategies that let me benefit from, if price keeps like consolidating, I'm still going to make money. If price gives me a pullback, I'm getting filled at the prices that I want, and I'm still willing to, take an income trade that I think is fair. At this stage, like I'm not doing anything on gold. And I hate to say it, like I'm not adding to these highs, but rather I'm just going to start managing the profit side. If we start to stretch 38, 39, 4,000, I'm moving profit targets, I'm moving stop losses. And what I'll do is, if we get a pullback, I know exactly where I want to start buying back in. This 100, 144, 200 cluster, but that could be a 20% pullback. So
Right.
I do wonder. So do you think the timing would be as quick as September 17th, or the timing would be like maybe later in the year? We roll into 2020. I'm just like, what's the disruptor for gold, if anything? I mean, it's
Well, you
been
got
institutional, it's been central banks, but it's like, is it the retail crowd that's now like jumping into gold?
well, yeah. I mean, you're going to have the retail crowd. I mean, they're always the late ones there, right? But the I think one thing that I mean on my radar, what I always kind of look at is, yeah, this time of year gold's kind of bullish anyway. But you got Fed announcements, but not only that, you got fiscal year starting October 1, right? So you're
Right.
going to quote unquote get new budgets and everything like that. And there are times, and you'll even see bonds like the 30 year and the 10 year, they'll usually have a decent rally after October 1 on the
Mm,
bond. The yield
hmm.
comes down. And
Okay.
that's just because of, well, they got to refinance everything.
Right.
So the question is now, our deficits are so bad, what are they going to refinance? And I think everybody's running over to gold because, well, our debt, the world's debt is getting
Yep.
worse and worse and worse.
Yep.
So, and I think everybody's running to safety right now, and even with silver, and if you notice, as we were talking, what was it, a week or two ago, I said there's going to be a big problem at 42 on silver. You remember that?
Yep. Yep.
Well, they are taking some nice Polaroids of it right now, and they just can't
Yeah.
seem to get there. It's
Yeah.
just stalled out just below 42, and I'm just like, bust 42, and you'll see gold go to no, probably 38.50 if it does that. So, but yeah. I'm waiting just for silver now. Now that it's gotten above 40, let's see what it does with 42.
You like dips? I mean,
Oh
I
yeah,
told you my profit target's all time highs, which is basically 48 to $50 spot price.
right.
So I'm holding my chunk of my chunk of silver
Yes,
is going to be towards that all time high. But even dips in here, I mean, getting a pullback into any of these moving averages, I'm just going to
yes,
establish another position and then
absolutely.
take this run. Yeah.
I love pullbacks. I mean,
Yep.
especially, I mean, every time gold pulled back for the past, 6, 8 months, I mean, yeah, you have to grit your teeth a little bit, but I'd buy it.
Yep.
And all of a sudden it'd start paying again. So I love the pullbacks. In fact, after I saw the big run yesterday, I was just like, when I woke up this morning, I was like, come on, gold, pull back. And it was still making highs. I'm just like, okay, fine. I'm
Yep.
still longs. They didn't stop me out, but dang, I wish they would have pulled back. So
I know. I do too.
but yeah, I mean that's the one thing that I mean I don't like to buy an all-time high. I mean
Hmm.
I'd prefer to have a nice little pullback. No, even if it's 2%, it's fine with me. I'd still want something. So, but that's the cool thing about it.
Yeah, I mean, even with the 21 period moving average, we're now 4% above the 21 period. I mean that has
Yeah.
provided, even through this most aggressive bull market, this provided support many times. So again, this is the discipline that comes to trading. You see this, and it's like, I got to jump in. It's, well, you really don't, because if the market's going to be obedient at all, we're probably going to have a pullback to retest this level, and we'll retest this 21 period. Or even if it goes higher and then it comes back to retest the 21, you can still buy that dip. I still like the run up. Silver, same thing. Just be patient. If you saw what I just did on my chart, I just set a chart alarm um, on these moving averages. So now I have a 50 period and a 144 chart alarm. So if we pull back to them, I'm just going to start putting in SLV puts. I'm going to start putting in silver future trades and just try to participate with more of the income. This was a nasty little spill, but same type of thing. We can go down, close back above. And if you want to wait for the dip, then you get price to close below moving average, close back above it. You establish a position, stop loss below, and then go to new highs. There's your trend. There's your trend strategy. I like to go in when it hits this level and then establish an option trade that lets me have time. if I give myself, 60 days or 90 days or 120 days, chances are if this is a pretty strong trend, we're going to resume the uptrend in that window.
Yep.
So that's
I
what I
like
like to
that.
do. Yeah.
Yeah.
So
I
gold and
love the
silver, they're
pullbacks
great, man.
in metals.
I think they are. I mean, I hit new highs today. 436 is my new high for the year. And I'm like I said, I'm pretty happy when I hit new highs in the portfolio and the market's not at all-time highs. But I think a lot of this to like another run higher in silver, another run higher in gold. Bitcoin is not at the highs. Here's 124 and change for the highs. We pulled all the way back to 107. Is this considered Bitcoin crashing? Not in my opinion. This is a 13.8% pullback. I think that this is like, I don't know. I don't know if this is true, but like maybe Bitcoin in a way is like leading some of the risk on or risk off flows in the markets, where when we sold off a little bit, I listened to a podcast last night. This is an interesting concept that if the Chinese markets go higher, that Bitcoin tends to underperform. There's a lot of like family offices in China that when Chinese markets are doing really, really well, then they pull that liquidity from their Bitcoin holdings into put it back into the stock market. They
Wow.
play the domestic market. So I thought that
Cool.
was interesting with like the number of like wallets and exposure and trading in Bitcoin in China. But
Yeah,
yeah.
absolutely.
So I still like it. It's just clearly a bit more volatile. I think that volatility has been suppressed in a pretty big way on Bitcoin, which you should be thankful for. I mean, the days of, I don't know, do you trade Bitcoin at all, Jeff? Do you have anything on Bitcoin?
I dabble in the ETFs. I don't trade the
ETFs.
Bitcoin futures.
Yeah.
I don't like those.
Okay.
But I do dabble in those various ETFs that they have on it. The one
Yep.
thing I wish they would have on it would be like a Bitcoin VIX.
Yeah. That'd
That
be
would be
nice.
cool.
Yeah. Yeah.
And
But would they treat it like they do the S&P VIX, which is going to be vol suppression?
right.
Right.
And
So it
that's
would just be like tons of covered calls, tons of vol suppression, eventually it gets squeezed. And I mean, it
yeah,
would just probably equal some radical movement in the underlying. But I
right.
think it'd be a good way to have that as kind of a correlation to see like, what's a VIX. Actually, let me ask you a question. Speaking of VIX, do you ever use the VIX 1 day versus the standard VIX? Do you ever use the VIX 1D?
No, I don't know what that is, to be honest.
So
What now?
so we have the standard VIX is a 30-day measurement for the S&P.
Right.
And so I use this for my daily profit play. I use the VIX. It's called the rule of 16, which is you take the VIX value. So right
Mhm.
now the VIX is trading at 16.6,
Right.
and you divide that by 16. On any given day, it's not perfect, but it's like probably 95% accurate. If I take the VIX at 16.8, 16.68 VIX and divide by 16, the chances of the market going 1.04% or higher or lower is very rare. So if you want to calculate like the kind of maximum upside or maximum downside in a day-to-day basis, I use the
Mhm.
VIX rule of 16 all the time.
Okay.
And it helps me get some really good trades and set some ceilings and floors for my 0-day trading. It's not perfect, and literally just saw an example of it. Jackson Hole, this thing was blown out. Like I calculated Jackson Hole volatility. We're sitting around like I don't even know when that was. Let me go back to the VIX here. This was Jackson Hole. We're sitting at
Yeah.
16.3 on the VIX. Okay, 16.3 on the VIX, and we plummeted to 14 VIX. So, in essence, even if we started at 16, that means there's about like a 1.1% move based on the high and low. Jackson
Mhm.
Hole, the market ripped with I mean, it was 10 a.m., right? It was Jackson Hole. Powell
Right.
started to talk, and the market just ripped up. It was almost a 200% ATR for the day. It was way above both of my calculations, which is based on the previous day's close and the open of the market, because we did have a slight gap higher going into Jackson Hole. So anyway, point is it's accurate to the tune of probably 95+%. I do use it every day. It helps me establish some good rules. But there are outlier days like this.
But when you
Anyway,
see an extreme like that, let me ask this. When you see that extreme, right?
yeah, you fade it the next day.
You fade it the next day, right? Okay.
Absolutely.
Okay.
Yep. And that was
Okay.
and if you did that on Jackson Hole, like you can see the Jackson Hole day was right here. So Jackson Hole was we gapped higher, we ripped on 10 o'clock. And so this was Jackson Hole, and the rest of the day did nothing.
Yeah.
If you were fading that move for the end of the day, you still did fine. And I ended up managing. I had like new highs in my portfolio for the day. I did lose on the 0 day, but the next day was 2 winners.
Yeah.
So for the week, I think I finished like, 8 for 9 for the week. I still made money, but that was a blow up day on Friday, which kind of sucked. But we opened up on Monday and we faded. And then Tuesday was sideways. Then Wednesday, we came back to highs again. But it's
Mm-hmm.
like when you see an outlier, yeah, you have a pretty high chance of getting the market to respond to something normal the next day. It's
Right.
very rare that I see back-to-back outlier type days.
Okay.
Yeah. So I'll go back to the VIX one day. So what I'm using the VIX for is that rule of 16. When I look at the VIX one day, very rarely, if ever, we see the VIX one day greater than the VIX. But when this happens, this also serves as like a really high probability of selling premium. So the reason I use the VIX one day is like I don't know if if there's like a rule of 16 to this. I don't think there is. Because this, I mean, honestly, I'm going to do this just for fun. If I take the 7.94 divided by 16, is there a 0.5% move today? I'm curious what the markets have given us. Right now, we're up about 0.37. Intraday price action from the close yesterday, we went up as high as about 0.62. We're currently around 0.35. Maybe it's just like intraday price action. I should have faded that freaking 55 top. Dang it. I missed it, man. I had my pending order in. I was seeing like 245, 250. I'm
Right.
like, well, again, I did the VIX today. It's like I've got my potential top and my bottom, but I've got a nice little call wall here at like 50. It's actually responded really nicely. So anyway, I'm already out this morning with a 33% profit, so it's okay. I'm still short on a couple of trades. We had actually, have you index wise, have you taken any shorts? Have you been doing like bear call spreads at all recently? I'm just curious of what your little near term trades have been.
Well, I do when I see the S&P make a high, if the next day, right? So we make a new high, new all-time high, whatever.
Yep.
I go to the next day, if they drop below the opening 30-minute range,
Okay.
then I start selling call spreads on the SPY.
Gotcha. Okay.
And that way I have kind of a confirmation they got to do all their jostling around, everybody doing this, that, whatever in that first half hour, and then after that they got to set a trend. And
Right.
if they bust that to the downside, I start selling call spreads immediately. Now, if they take out the high side, I don't do it because they're going to continue the rally, right?
Right.
So that's how I do it. I let the market set the tone of, yeah, we went up, but we're going to correct this thing back. And even this morning was kind of interesting. If you kind of watched it this morning, I mean, of course, we had jolts that came out at 10, but the the Dow and the Russell, of course, right when they came out, they made new highs, and the S&P was trying to go with them. The Nasdaq was making lows, and I was like, "Uh-oh, that's not good."
Right. Right.
And then after jolts came out, the Nasdaq said, "Okay, I'll take out the high," and so it did. So, but I thought, well, man, if there was no news at 10 o'clock and that Nasdaq was still making lows, it was going to drag the rest of the market down with them. And that was even
Right.
after the Google news yesterday that they didn't split the Android and Google platforms. And I guess that rallied everybody off that thing.
Oh
So
my gosh.
yeah,
Wow. Well, let me see what I think I've got some ratio spreads in here for Google. Let's find out. That's looking pretty good, I guess.
yeah.
I did some expiration ones, got some shares. Nope, I closed those out. So my project options edge, I closed out a bunch of ratio spreads last week, and those are like 85 to 90% winners. So I guess I don't have anything left. It's just some shares, which is fine. I'm up 20% on Google. I've got to put out there just way the heck out of the money. It's pretty much worthless, but
Yeah.
man, what a run.
Yeah, both
Um,
them and Apple jumped up off that. I mean, I don't know if you looked at Apple today. I mean,
oh
both of
yeah,
them kind of jumped up off of that news.
there we go.
And yeah, I mean, we were down at 230, and all of a sudden we're at 238 on Apple. I'm just like,
Yeah. I mean,
whoa.
look at old mags, like right back up to these highs again. So
Yep.
let's go around the board. Let's go Apple. Apple's up, pretty big gap to the upside. Amazon still choppy, but I mean, logistically, I'd still take Amazon over a lot of companies. I think that, the consumer ultimately matters for Amazon. There's just so many sellers and there's so many buyers, and when things kind of tighten up on consumption, maybe Amazon struggles. But logistically, I would still put them in the same ballpark as AI wise and efficiency wise and margin wise. I feel like Amazon is
And
still a great
you
company.
know they're getting rid of their the Prime. You used to be able to, for your kids and stuff like that, you could say they can use my Prime and they can get stuff shipped. They're
Okay.
cutting that off. So
Mm,
unless you actually own the Prime membership, you don't
right.
get free shipping. So
Oh my gosh.
they're cutting that off.
Well,
It's been
just
around for 15
but
years.
I could still send it to a multiple address though. I could buy it and then send it to another
Exactly.
address. Yeah, it's fine.
Absolutely.
Okay.
Absolutely.
Okay. This isn't a Mag 7, but obviously they're a $1 trillion company. Google, blows the top off these all-time highs. Wow.
Yeah.
And what's interesting is this is overbought with divergence. We still blow it out. I don't know. Am I stupid here by wanting to fade this?
I don't know. I mean,
You know what I'm saying? Like, let's
yeah,
take a look at
they
Google.
jumped that thing up. I don't.
That's such an outlier type move, and it's not
Yeah.
even an earning. It's not even earnings. It's just like this is,
No.
jumps on pre-market trading. The court ruled favor an antitrust case, raising a stock. Okay. Jeff, I kind of want to fade this move, man.
Oh yeah.
Let me see. And let me. They've got a dividend announcement on the 8th, which is next week. All right, let's look out to maybe the 19th expiration. This isn't going to be anything wild and crazy. Or if I want to let the FOMC hit, let the market have some type of brink of correction, maybe I just go out to the end of the month or the first part of October. I think I'm going to try to get like a broken wing butterfly and do the expected move. Let's see what this looks like. If I were to buy, let's say I buy the 45, sell the 50, buy the 60. This is what I hate about some of these like indexes. I can get like, 50 cents or $1 on this trade. This I get freaking 2 cents for. It's just not a great trade that way. Now let me try a bear call spread. If I do a sell the 15, I get, gosh, dude, 47 cents. Like, come on, that's awful. 75. I mean, at least give me $1, right? So maybe, maybe I'll try this just for fun. Let's do a 40 by 45. That's right at the expected move. This is a 30 delta, which is around that like 1 standard deviation. I would imagine, Jeff, that this move right here probably blew out the typical standard deviation move.
Oh, absolutely. Yeah.
So if I'm selling now a 1 standard deviation move, which would be around that 29 delta, 30 delta, I'm hoping that I'm not going to accept this as $1.10. I'm going to see if this one wants to get me filled for like a 2. I'm going to try to go after a $3 credit here. So I'm going to do a 240 by 245 bear call spread for $3, which means I'm only risking $2. And I'm going to see if we can stay below this by the end of the month. And all this would be is we've got good news, but then we have like a bit more of like a reality check for the next maybe 2, 3, 4 weeks. If there's any type of September effect, there's any type of correction, maybe this market rolls over just a tiny bit.
Yeah.
I could regret it, but this is why I would take like a low risk trade. So I'm going to set this for like $3 and see if I can get filled. That means price can go up a little bit higher, get me filled, hopefully at $3, and I'll take this trade. So if I win, I can make up to $3. If I lose, I'm only risking $200. So I'll put this trade in for Google. It's an October 3rd. I'll type this in the chat if anybody's interested. Where'd my chat go? There it is. So I'm going to set this one up. It's just a bear call spread. So I'm selling the 240 call and I'm buying the 245. So Google, this is a 10-3 expiration. I'm selling the 240 call. I'm buying the 245 call. $3 credit, and this is a pending order. So it has not been filled, but I'll let that sit in the platform. If we drift a little bit higher, the recent highs around 231. If we go, let's say like 235-ish, we go 235, maybe a bit higher. That gives this thing room to run. But once we hit that kind of, we already had like I'd say this is like a blowout move as far as like more than 1 standard deviation. Now we go a little bit higher. It's like we stretch and then we fade. This is probably a gap that gets faded in some way, shape, or form. Overbought conditions with divergence and then blow this thing out. To me, this is kind of like a Microsoft move, which is like an exhaustion gap, and then we probably see price fade. So if I don't get the trade filled, it's okay. It's just I don't want to short it now and then have the market drift higher on me.
Right.
That's all. So I'll give us some room. If it works, it works. I think it's a good trade and it's a low risk trade.
Yeah. When I saw the jump up today, my thought was I don't see where that helped revenues any.
Yeah.
Yeah. You're just not splitting them apart. So, okay, fine. But
and I might
really
try
jumped.
one more trade here. If I go buy, sell, buy. No, this is a little bit more of a fancier trade, but a call condor that I get a profit trap on. I'm just not excited for 20 cents. So I'd have to move this down a little bit. So buy, sell. Let's go 20 wide. Like that's not a bad trade. but I'm still risking. I'm risking way more money on this trade. I could get up to $550 a profit, still have about a 76% chance of profit. However, if price is greater than 240, I have, potentially $20 worth of risk that I'm offsetting, but I'm still risking 14. That's a stupid trade to me. So it's not enough premium, and it's certainly not a higher probability. I do this trade a lot in indexes where I take this trade for like a 95% probability, 96% probability. I take those trades a lot for my waterfall income. So anyway, I'll pass, but I'm going to keep that credit spread in, see if I can get filled for $3. I'll set a chart alarm here at a gap, see if we fill this gap at 214. And then if that price action is hit, then I'll just, whether I win or lose, or I don't even get in the trade, if price fades here, then I'm canceling the trade, because the odds of that, that's not going to get filled. But if we stay here, we just drift a little bit higher. I would like to short that for like the next 30 days. See what happens. All right. That's Google. We got Meta still off the all-time highs. Meta and Microsoft both doing the same thing. Like Microsoft off 9. This is what I talked about for that like exhaustion gap. This was earnings on Microsoft, and they faded like 9%. Meta, island gap, we hit slightly higher and went lower. I mean, it's just a little bit off those highs by maybe 5 or 6%. We've had about an 8% correction. Netflix, I'd still like to see a decent pullback in Netflix to the 200 moving average. Nvidia, we hit 170. This is around what I expected was a 1266 move. I do have some trades running on Nvidia. Let me check those really quickly. Here. Did a trade on Newsbreakers and did a trade on Pinch. So Newsbreakers is out to September 19th and Pinch is out to December. So not a rush. It's like this one still has 16 days. I want to see if price can get down into the, I'm hoping it's not in Nowheresville. I mean, I want to see if price can get down to like 165 or 160. I think we can get there, man. I mean, we're at the 50-day moving average. We pull back to a 23% fib. That's what I'm hoping for, is like there's a little momentum here, and just give us a pullback. If September's a pullback window, this would be a good pullback right here. This would be a good pullback right here, and that should get me paid on the trade.
Right.
So,
I
Tesla.
was gonna say, where's Tesla at? There.
I did a trade for Project Options Edge on Tesla. I did a 260 by 250 ratio spread, and then a 230 by 220 ratio spread. I pulled in over $1,200 in credit. So it was a $12 credit. Probability profit is still very high. I would take ownership at 250, but my break even would be like 234. And then this one, if it got filled, it would be a break even of 204. So odds of assignment are low, but price wise, it'd be very low ownership. I also put in for some of my managed accounts, I just bought like 5K and 10K worth of exposure. And this is position 1. And I just think, I don't know, man. I'm curious on your thoughts, but I like Tesla going back to all-time highs. It's been a lagging Mag 7. This little wedge formation, this potential bottom out, little consolidation. It might be like a larger sideways range, but if we break like 380, Jeff, I think we can go to 460, 470.
Now that one I'm agreeing with.
Yeah.
Trying to.
What have you disagreed with so far? Have I said anything you disagreed with?
Well, the only thing, me and Tesla don't get along too well. I'll just say that.
Okay.
So if it breaks out above there, I'm with you on the upside. But I've tried to buy lows in Tesla before and gotten hammered so many times.
Yeah, man.
that I'm just like, I can't do this anymore. Yeah. So that's why I say I agree with you on that. I've been trying to buy this thing down here. If it goes back down to like the 200-day moving average or something like that, knowing me, I'll probably buy it there, and then it just gaps down.
Yeah, that's why I did like the ratio spread. I mean, honestly, because I looked at this as like 275 is a pretty solid support level, and we had this consolidation around like the 270 to 220 zone. So I literally, I'm like, look, I like Tesla enough that I think this is a price target for me. I wouldn't be surprised if Tesla is ultimately going to be one of the most profitable companies in the world. It's not the automaker. That's why I'm not trading Tesla because it's an automaker. I'm trading Tesla because of everything with energy and AI and humanoids and embodiment of AI. Like that's why I'm in Tesla. Yeah. And it's the reflection of that. Like the optics of Tesla, it's more than an automaker. I think that it's a massive disruptor in the industry, but it's more so like on the cutting edge of where manufacturing and where energy plays and AI goes. Yes. And the private side of Twitter or X and, SpaceX and everything with Elon Musk, it's like there is a sentiment attached to Tesla. If you like or hate Elon Musk, it's like somehow reflected in the stock price. So
Yes, and I'll agree with that. I mean, he
yeah.
has other companies, but it's always reflected in Tesla because that's the only way they can touch him.
Yep. And that's kind of the same thing with Jeff Bezos and Amazon. It's like, he's launching like an EV truck company. Is that Slate? Is that his thing?
Yeah, have you seen
Yeah.
those
They're
trucks?
like
Those
they're
things
like
are really cool
$30,000
trucks.
trucks. Yeah, they look pretty nice. They're kind of built like the Ford Maverick, but I think they're small little EVs. And I
Yeah.
mean, I had a conversation last week with somebody that like loves their Rivian. I'm like, that's $150,000 car. That's like they lose like $70,000 per vehicle, but somehow
Oh,
Rivian's like people love them. I just think that's an insanely expensive vehicle. So
yeah, but Bezos, I mean, I think his trucks are going to be like around 10, 15,000, and then they're, I don't know what you want to call it, that you can put a ton of add-ons onto them,
okay,
make them do different things or look different ways, and that's just where the cost comes in. But I mean, it is really, really cool.
I mean that would
Yeah.
be pretty awesome actually. When are these slotted to be delivered? Are these like a year out or so?
Yes, they're out in 2026 or 27. It's in there somewhere.
Okay. Slate trucks, first look motor trend, $27,000 pickup ready. I mean, they'll pop up. They'll
Oh
start to be
yeah.
popular. I just, again, like with something like this, I like the idea that it's something different. I don't know how disruptive it is to like every other major automaker right now, but how do you get these things fixed? How do you get these things repaired?
Right.
Where do you take a slate truck when something goes wrong? You know,
Yep.
I don't know. Maybe you take it
Yep.
to Tesla. I doubt it.
Yeah.
Low starting MSRP. I want to look into like the kind of the DIY stuff, and you can build it out however you want. Like that would be kind of fun to customize it, and maybe you're all in for like 25 or 30K, but that's
Right.
affordable, and hopefully
Yes.
it's just not a piece of crap.
Yeah. Well, and that's the big thing is it's all brand new, and is it going to be a piece of crap? I
Yeah,
mean, that's what you don't know.
I would hope not. It's like
Yeah.
we've had how many blueprints of cars that we've had for the last century. It's like I think it should be nice to make like cars that have less parts. I
Yes.
mean, maintenance shouldn't be a pain in the butt. I
Right.
have my car right now it's in a dealership, and they are just racking up the fees right now, and I'm
Of
like,
course.
I don't even know if it's worth even keeping it or if it's worth just like looking into a new vehicle, you know.
Yeah.
So anyway, but yeah, I mean that looks cool. This is kind of get the cab on there. I mean, if you get maybe another row of seating, maybe it
Yeah.
turns into an SUV or maybe it is cargo. I don't know. Looks kind of
Right.
cool. Whatever. It's cheap
Yeah.
enough.
And that's one thing that's nice about it is if you got the pickup, it wouldn't. I mean, for another, however much it is, you could turn it into an SUV. I
Yeah,
mean, you just buy the topper and throw that
there
thing
you
on
go.
there, and off you go.
Winter 2026. So
Yeah.
I wonder if it's going to be like you got to be on a waiting list, and I'm the type of, especially like vehicles. I'm like I'm not going to be first to market on this one. I'm going to let the first batch of hardcore buyers that get their slates. I see them popping around, and then I read about there's recalls. I read about there's problems with them. It's like let's I don't want to be first to market here.
Right.
Let's let the pilot testers out there make sure they work. And it's like okay, maybe I'll entertain the idea. So
So this is
anyway,
150-mile range. I think that's what that said.
yeah. Well, out here that'd probably be cut in half.
Yeah.
I'm not joking. Like everyone that has like the long range Teslas, they might get 300 to 400 miles. I think they might get half that because of the mountains out here.
Yeah.
So just got to be aware. Like, and there's enough charging stations around. Like all the grocery stores have like a row of 10, and there's probably some
That's
charging
nice.
stations. So anyway,
That's
all it's
nice.
the whole like logistics of like you get a car, you got to reconfigure your home or your garage. Where do you charge it when you're going on a road trip if you're driving anything long? But for a little back and forth commute, I mean, I think it'd be awesome. No
Yes.
maintenance, no emissions, like that. That is kind of nice, and it's quiet.
Yeah.
Anyway, all right. Who's got an
Yeah.
EV, by the way? I'm just curious. Bodine saying old Ford Ranger updated. Yeah, 90s Ford Ranger. Yeah, it's one of those like old school trucks. 100 to 150 mile range is really low. It is really low. I mean, that would be. I mean, I literally bought a motorcycle and sold it because it only got like 80 to 100 miles on that tank. That was gas, but I'm like, I'm turning this bike in. I flopped it out in like a week. I mean, I didn't know. It was kind of like I was eager to buy a bike. I found a nice one and I took it for like a 70-minute ride and I almost ran out of gas. So I'm like, all right, let me get a bigger bike that can at least handle it. So now my
Yeah.
bike, I've gone, I think I can get up to almost like 250 miles in that tank.
So
So
there you go.
it's not bad.
Yeah.
You bike rider, dude? You ever dabbled in motorcycles?
No,
No?
when I was in college, I was a scrub tech in surgery, and after being in that, I wouldn't want to touch a motorcycle.
Ah, okay. Yeah. They're not, yeah, I can understand that.
Yeah, saw too many people broken up on a motorcycle.
Yeah.
So,
All right.
but my youngest, he's a biker. He likes them.
Okay.
So, and but yeah, he loves cruising around on those things. He'd prefer it over a car any day. It just rains so much down here, it makes him mad.
Oh
So,
yeah. Yep. Well, it's going to be a short season. I just got this bike maybe three weeks ago, but I think we're going to probably see some snow in the next 6 weeks. Probably
oh
by end of September, early October, we'll start to see some snow and get a base, and
yeah.
then it's all over, man. It gets cold, real cold. Even sunny, but you're just going to be surrounded by 4 or 5 feet of snow.
Ah, wow,
So anyway,
wow.
all right. What else we got going on here? Market is kind of hitting some call walls today around that 50 handle. I'm looking to kind of sell that into today. I'm trying to get some fills. I haven't had anything yet. I took that trade pending on Google, SPX for the day. I did sell some premium. We had, the VIX jumped up to 19. I sold some premium with waterfall income for my services on SPY and Qs. And that worked out pretty nicely yesterday. We got a pretty good probability of profit there. Let's see here. That's NVIDIA. Let me go SPX. So still pending. That is a broken wing. Still pending. Still pending. Yeah, I mean, these might just sit for the day and not get filled. I'm trying to sell as high as like 64.60, 64.70, and maybe have a profit trap in there somewhere. But this is what I do with a lot of my zero DT trades is I have like a couple core strategies that I get filled almost every single day on for some small profits, like 20, 30%. And then I kind of structure trades where I'm like, if I can get, kind of the call side of the day or the put side of the day and kind of get my tops or bottoms based on my calculations, then I usually let those trades marinate. And I can typically get, if I can get like $2 to $3 on a $5 wide credit spread and get that filled for some partial profit, I'll try to take another like 50 to $100 out of that trade. But we'll see what the day does. Any thoughts on this really quickly? I think technically, let me zoom out here. Any thoughts on this market hitting new highs, Jeff? Do you think we're going to hit new highs before we sell off? Like, I'm just total, not right or wrong answer, but just curious on thoughts.
Well, my thought is right now is it's September, right?
Yep.
It's
Yep.
historically the weakest month of the year.
Yep.
And I mean, we started out the month at 64.78. We're at 64.48. We're down on the month, which we're only at what, 2 days old.
Yep.
So right now I'm on leaning toward I hope this market dumps stage,
Yep.
and gives me my 6-7% correction. Then I'll say let's go to all-time highs then. But
Yep.
right now I'm a little on the cautious side to the upside. One thing though, I was talking a couple of weeks ago, copper's gotten finally back above 460. FCX is breaking out if you haven't looked at that in a while.
Ah.
So, but I mean, if you want to look at how FCX is doing, I think it's going to go up and retest that 47. And then if it gets above that, we get to go back up to around 52.
Yeah, I mean,
So,
I'm seeing like that 55 to, I mean, it looks like just a big range to me, but
yeah,
I did some puts on FCX. I think I closed those out last week with Project Options Edge. FCX, I don't think I had that exposure any further because I closed them out. Let me see. FCX is gone. So I did close them out for, it was like 90+% of my max credits. I did like 4 naked puts.
oh wow,
I had them stacked in because it was, chopping around at 40. I think I did like a 37.50, 35, 32.50, and 30. I just stacked up a bunch of
yeah,
puts. None of them got assigned. They all just stayed above. Enough time went that I got the profit. But I kind of like maybe looking at the same thing, Jeff. Ivy
yep.
rank is kind of low, but let me see.
Oh, I'm always liking FCX once it gets below 40. I always
Yeah.
start selling naked puts when it does that.
Well, it's September, right? It's like if I went out to like I mean, I'm thinking like maybe next summer, like next June, and then maybe stack these things up. If I did like 37, 35, 33, 30. I mean, to me, some of my margin accounts, it ties up. I mean, would I potentially own 400 shares of FCX? Sure, but what's my break even? If I did 37 and 37 plus 35 plus 33 plus 30. So I mean, I'd own the shares at 33.75, and I can take 524. What was that? Shoot, what was that break even? 37. I'm gonna have to write this down. 33 and 30.
Yes, 33.40 was your break even.
33.75.
Okay.
Okay, so if I had a 33.75 and I can get filled at 5 and change, I'm just going to take like a 520 credit. 520 credit divided by 4 means I can lower that by another $1.30. So how do you feel, Jeff, about owning FCX at 32.40?
I'd own FCX at 32.40 any day.
Yeah, 32.45 being my break even. I also get an income trade of $500. If we can stay above, $37, it's full income, no assignment risk. 37 would be down here. I mean, we'd have to kind of break this like August dip. If we run up into like the 50s, I mean, it's going to change the options chain where it's going to be further out of the money. That should be pretty good probability to profit. It's not a high flying volatility stock.
No.
So I like this trade, man. I think I'm going to take it. This sets me back. Let me calculate what it is on a cash account. I think it's going to be a little pricey on a cash account. Let me go. Let's see. First cash account I have is this one. 634. So it ties up 13K on a cash account. I'm just going to do it on margin then. So I'll go margin here, margin here, margin here, and then margin for all of these. So I'm going to do this on, this is like hopefully getting like $500+ on this trade. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. It's over $5,000 on puts. It helps to move the needle a little bit. I'll take the trade. So let's throw this in 5. Let's try to get 525. Now these are all puts, so I don't think I'm going to be able to take more than like 510 or 515, but I'm certainly going to try. 520, see if I can get filled. If I get filled, then I'll put it in the chat. So try this first account. 520 not filling. Let's try 515. Give me a little bit more than the bid price. Yeah, you son of a gun. 514. Cool. That's not a bad fill, man. 514. So this is going to go out for my Project Options Edge officially. I'll post it here for Profit Panel. You do have to have some capital in this one. On my margin accounts, this one is tying up on a margin account about $690 in buying power, which to me is very cheap. Probability of profits around 80%. I'm happy to own the shares. I'm willing to own up to 400 shares. So I would allocate some capital to that, but I like this. I'm a big fan of diversifying. I think that having gold and silver, having some Bitcoin, having some energy, having some copper, having some energy, like there's a lot of different plays than just Mag 7. I truly think that we're probably at the brink of like Mag 7 has had an incredible, 18-year run essentially since the .com bubble, but it's become the Mag 7 over these last 15 years. I just think that this needed rotation is going to have to go into, if we really want to build out the future, it's going to have to come from the boring stuff. It's going to come from utilities and energy and the physical side of how we build out this infrastructure as opposed to the software side.
Yeah. Yeah. I think, and one thing I think a lot of people do is they blow off the copper side of things. They're always looking at all these batteries and all this stuff. They don't realize, how much copper is actually used. I mean, it's almost like crude oil. It's used in everything.
Yeah.
So,
and the energy play too is like, it's kind of like an all-in thing. If we're going to get it done, like we need lots of copper. We need lots of natural gas. We need lots of oil. Now I'm not getting filled at 514. So let's try it. Let's get filled. Bid is 508. So hopefully 510 will fill. All right. 510 getting filled on that second account. So I'll keep going here. Maybe 510 is a good fill across the board. So I'm gonna try to get filled for at least 510. 510. All right. 510 seems to be the number. Keep going. All right. This will just take me maybe a minute or two to get these accounts filled. Come on, 510. Don't make me beg. 509. There we go. 510. Okay. A couple more accounts here, Jeff. I'll do the exact calculations, but based on that 510 credit, That should give me a break even around like 32.50 or so. Yeah, so 3.6 here. Don't that bid price just dropped. I'm gonna cheap. So 509 is getting filled now. Try to get these all in before they take my bid price away. I'm pretty comfortable that I'm going to get over $5 a credit. 508.
They're running on you.
509. That was 87. Okay, a couple more. 509 is filling. Okay. In. All right, so that's officially in. I'm happy with that trade, man. I like it. I mean, I took a nice profit from it earlier, and I don't mind revisiting the whole trade because I like FCX.
Yeah.
I tried to trade copper futures. We talked about it when we had that crazy disruptive move, but I just didn't see the futures market give me the type of trade that I wanted, and the fill was terrible. So I held off. But yeah, I'm gonna put this in. So this is FCX officially here. Tracker. All right, this is going out for my project options edge. Anything else, Jeff, you want to take a look at this morning for profit panel?
Well, just the other
Anything
side of
you're
that.
liking?
I mean, the one thing that I like also is SCCO, Southern Copper. And if
CCO.
people are, when you look at big numbers, it's starting to break back above 100. So we could probably move back up to that 105, 110 area just on kind of a normal breakout kind of thing. So
I like that on FCX and then SCCO.
yeah, SCCO.
Okay,
Southern
Copper. Oh,
yeah.
baby, look at that snowflake analysis.
Yeah.
Loving that.
So
not loving that though. That's discounted cash flow.
yeah,
97 down to 55. But I mean, recent highs at 125. Would this be one that it's like, are you looking to buy dips? Are you looking like 90 and lower?
Oh, yeah, if I can, I mean, I'd like to see the thing, pull back to at least the 92 to 90 area.
Okay.
And if it does that, on it all over the place.
Like it. Okay, cool. All right. So this is let me get that FCX trade posted.
Yep.
This is June 18th. So we're going 6/18 expiration. That's next year. So I'm going, it's not quite a year, but just under that. I'm going sell the 37 put, sell the 35 put, sell the 33 put, sell the 30 put, pulled in $5.09 credit on the low end, willing to own all 400 shares, break even price. So we would have the 33.75 break even price would be 32.47 if I got assigned on all of the shares. So, and the goal would be I keep that assignment 32.47. Let's go back to FCX here. So 32.47 break even would be, just off this April low this year back into 2022 bear market lows. I mean, I like copper, and here's the trade that I anticipate. If my break even will be way down here and price just goes up, most likely that $5.10 credit is going to be trading for. Ideally, it's like if I get this thing trading for like 210 or less, okay, I'll just take the $300 profit, and I'm not going to sit and hold it all the way to next summer. So if we see price going up into the 50s, this should make all of my puts further out of the money, which gives me a higher probability profit. And therefore, the option chain will reflect that. So right now I'm trading at like the 20 delta, 16 delta. If price goes higher, this becomes like a 10 delta, an 8 delta, 5 delta. And so I'll probably retain a lot of the credit out of that trade. So if we have initially $5 and I can close it out for like 2 or less, I'll try to keep like 60, 70% of the max profit if I don't want to wait all the time.
Right.
Otherwise I wait and if I own it at 32 and I can hold this thing back to, 45 or $50, that's also a pretty good holding trade. I'll make a lot more money that way. It's just, I potentially have to tie up the capital getting assigned.
Yep.
So cool, man. SCCO, I'm going to keep that one on the watch list as well. Blake, do we have something to queue up here for today
Yeah,
as we're wrapping
I'll
up?
actually show them how I trade the old energy markets and stuff like that myself,
Yeah,
and
I
kind of
love it.
talk about some ways of trading energy and not having to worry about what the S&P does.